that I wore at Charlie Schramm and Courtney's wedding.
Oh, wow.
Okay? I was in my closet looking for something to bring to MoneyConf, and I hadn't worn this since then. I thought, why not wear the Schramm wedding outfit? You know what I'm saying?
Yeah, no, very good choice. I had to dress up to just go off stage here at Money Conference.
You're looking sharp.
Thank you.
Speaking of MoneyConf, it's a bit, let me get your reaction to this. It seems a bit corporate, if you know what I mean. So, first of all, it's not crypto, it's money. And it's like there's a lot of corporate vibe here. It's different than the usual crypto conferences that we go to, Tom.
That's true. And actually, like, it feels like half the people I speak to are in the KYC business.
Right, know your customer, which is a huge trend now in crypto. And especially for ICOs that were launched last year, they're now being revisited and they're being asked to provide KYC, know your customer, rules and regulations. The regulators are coming into the space in a big way, Tone. Is that a surprise? What do you think?
It's not a surprise at all to me. I've always saw all of these ICOs going back to Ethereum's ICO as securities. And it was kind of good that Jay Clayton finally made it somewhat clear in a recent interview when he said if your token was created by an enterprise, which almost all of these are, and if anyone is buying this token with an expectation of profit, then you're in violation of the Howey test and you are a security. And if you are an ICO in the space, you should probably be a little bit nervous right now.
Yeah, Jay Clayton, he made an interesting statement where he's basically conflating IPO with ICO. He's saying if you're interested in doing an ICO as a private placement, do a private placement. But if you're interested in doing an ICO or an IPO that's outside of a private placement, come see us at the SEC. So there's not even a cigarette paper between IPO and ICO. The industry expectations, if you talk to the crypto people, were that we're reinventing IPOs. Yeah. The rules don't apply to us. It doesn't seem to work.
Right now, I will say, however, it's a little bit disingenuous in that a lot of them tried to go to the SEC a while ago, and the SEC kind of wanted nothing to do with it. So they are late, and unfortunately, they are a big arm of the U.S. government, and even though that they are late, they can still get you. They're still going to say it was your fault.
Yeah, Bernie Madoff was in an open investigation for more than 10 years, I think. And they went before the regulators 3 times with proof. You know, that's all they do all day is look at stuff. Now, you were on stage here at MoneyConf with Stacey Herbert talking about crypto and its securities and investing. And the point came up about Reg D investment. And I think the debate, if I can characterize it correctly, was that, well, you know, Reg D precludes anyone from having a certain net worth or income from participating in, let's say, a Reg D offering. And a lot of people on the other side of the debate are saying, hey, wait a minute, that means like most of the market won't be able to participate. What are your thoughts?
Yeah, so that was actually a really good question. And that comes up a lot. This idea that, well, how come only rich people get to invest in Facebook's pre-IPO shares, right? How come something like that isn't opened to the average investor? And my argument to that has always been, well, it's a very speculative investment, and even professionals can't get it right. 90% of all businesses fail, especially businesses in brand new technology. The failure rate's probably even higher, but people still feel that the little guy should have a chance. And it's a tough argument. And now I kind of say, if you really want a high-risk investment, just go invest in the stock market. At least those companies have already proven they're past the pre-IPO stage, and they're already publicly traded. And most people feel that the stock market is always overpriced and always too dangerous and always too risky, without realizing that all of those companies that are currently in the stock market were 100 times riskier before they made it into the S&P 500. But for some reason, people think that that's not risky. But S&P 500 companies are companies with revenue, companies that have a very low chance of going bust.
Right. This argument that, well, how come I didn't get a chance to buy Facebook? It's a bad argument because along with Facebook, were 100 other companies trying to do something similar, and 99 you never heard of, or they all went bust. So to say that, oh, you were able to pick that one that was Facebook is fallacious. Plus, even venture capitalists, their hit ratio is 1 in 10. They're 90% losers.
And they're the experts.
And they are the complete experts.
And to the Facebook thing, I say, well, all of your money would have probably been in MySpace, because that's where my money would have been. I always thought MySpace was better, and I was a user of MySpace. I hated switching to Facebook. I just had no choice. And you're right on that. And my best example of this is the biggest pre-IPO investor in Pets.com was Amazon. So even they didn't know.
Right.
That they were going to win.
Right. The regulations are there. And look at the pension market, for example. You know, we went through a transition in the 80s where pensions were being self-directed by employees and taken out of the hands of corporations. And individuals ran them into the ground. In 2008, they got wiped out, right? Because individuals couldn't handle the volatility. So they were, before then, just getting a coupon clipping 4 or 5% return every single year. They retired with something that was, you know, a nice pot of money. But if you give the individual that choice, they get caught up in the emotions. They're not professionals. They get wiped out. So I'm making the argument that Reg D serves a purpose. So let's visit the other side of the argument for a second. In the space of crypto, it is part of, is there a way to get more public participation in crypto in a way that satisfies both the need to protect people from getting wiped out and still have exposure to these emerging technologies?
Well, Bitcoin, in my opinion, is your safest bet. But once again, just like people don't want to invest in the S&P 500 and they would rather invest in Facebook.